So you want to learn more about the different types of multifamily investments? Well, you're in the right place. My name's Randy Lawrence, and I've been investing in real estate for the past 20 years. We currently manage over 3,000 apartment units that we own. By the end of this video, you will be knowledgeable about the 4 categories of multifamily investments and the risk and rewards associated with each of them. Let's get started. All right, so first of all, let's talk about core real estate investments. We'll talk about apartment complexes. So a core real estate and apartment arena is where you'd basically be looking at a coupon clipping exercise. What I mean by that is you're going in, you're buying a well-established, stabilized property, typically a lot of times has a newer vintage to it, and you know that going in, you're going to buy it. And again, I'm just making up a current number. But again, you're getting a 6% coupon, meaning a 6% dividend distribution, and it's just stable and it's growing a bit with time and inflation. So you don't have a lot of issues or problems with related to maintenance or repairs and those kind of things at the property. You also don't have a lot of, let's say dramatic value creation that can be done at the property, but you also have a stable investment return, and there are going to be also some natural market appreciation over time. So a lot of times investment firms will invest in this core real estate strategy because they have a larger pool of capital. They're looking to get what would be essentially like a real estate bond, meaning they've got the stability and the tax benefits of owning real estate. They've got this consistent coupon that's coming in, and it's very predictable. Now, the downside of it is you're not getting as high of a potential return as to what some of the other areas of real estate offer. All right, so the next area that we want to look at is what we call core plus in real estate investing. And so again, let's talk about specifics in apartment complexes. The core plus is where you're buying a stabilized property or asset. A lot of times it's going to be, again, as we said before, a newer vintage property, so there's less repairs, maintenance, and things of that nature at the property. But the plus element means that it's not just a standardized coupon where you're getting this 6% dividend coupon, if you will, but you have an ability to do some slight improvements to the property. And let's say that you can spruce up a bit of the interior, put in some backsplashes, add a couple different things like that. And now you get to bump the rents maybe $25, $30, or $40, something along those lines. So it's not a dramatic boost like you'd get with a value add of $150, $200, $300 per unit, but it is an additional bump. Now, what that additional bump does is it improves your overall return. So now, again, it is a great strategy that people like and enjoy. A lot of bigger investment firms invest in that arena because, again, they're getting the stability of the investment, the consistency of that coupon, if you will, and then there's a little bit of an extra push to the overall return. Now, the downside, again, is that you don't have as much maximization of opportunity in owning real estate where you could be achieving greater returns. The pro is that you have what is, perceived and most oftentimes is a more stable, just consistent return. Our third category we want to look at is value add real estate investment. Now, value add in multifamily space is where you have an opportunity to go in and purchase a community. Could be 70s, 80s, 90s, 2000s, even 2010. Probably 2022 is a little bit still too new, not always, but yeah, with that, you're going in and there's an opportunity to increase the value of the property by making improvements to the property. So, in some of the older properties, you're able to actually go in and do renovations that make it look from a 1985 interior finish to a 2020 finish. So that brings the rent where maybe the rent was $850. Now you're able to get $1150 for the market rent. And then others are where you're adding amenities to the project, increasing the usability of the project. You're making improvements to the overall exteriors and look of the community. That's another mechanism to value add. With all of these different strategies, your typical rent increase is anywhere from $150 to $300, in some cases even more. And so the pro of this is that you really have great opportunity to have a great return. There also is good security in it, right? Because you're getting the property at a good basis oftentimes, at least we are. And then you have an ability to drive value in a near term. On some of the properties we bought in 2022, in a year's time, we drove overall income up by 33, 35, or even 42% in 1 year. And so that is a fantastic element of security. Now, the downside to the strategy is there's more work involved with it. There's more investment of capital into it for the improvements. And, there is more transition that has to take place during that first year to 18 months associated with the project. The last category that we want to look at is opportunistic real estate investment. And again, looking at multifamily apartments, I would say all of our investing strategy has an opportunistic flair to it. We're looking for the very best opportunities all the time. But opportunistic, by definition, is where you're looking at a specific opportunity where you can go in and buy this property, make the improvements to it, and make an exit and make the return. Or you're buying it at a discounted present value based on the current distress of it. Or there is a situation with which the ownership needs to sell based on their own distress element, not maybe the property, but their own. And so that's an opportunity that presents itself where you can go in and take opportunity with that. Most people would say take advantage, but it's like, look, it's an opportunity that we want to be able to take and seize hold of. So these are the 4 different types that we look at when we're talking about multifamily investment. Our firm, we really love value add and opportunistic investing. And I say that because it's like we have the systems, the teams, and the processes to take advantage of and seize hold of these opportunities for our investors and for our firm. And so, we're going to already be doing the work. And if we're going to be doing the work, I'd like to get the best return. And we're able to also mitigate our risk when we take advantage of these opportunities. So for us, I think, they're all 4 available to you. You have to decide what's going to be the best fit for you. Are you willing to do the work? In our case, we're always willing to do the work. I have a free gift for you in the description of this video. I'm here to keep you informed so that you can make the best decision when it comes to investing your hard-earned money. And I've created a free guide to help you on your real estate journey. Click the link below to check it out. That's all I have for you folks. If you've learned something today, make sure to like this video and subscribe to my YouTube channel for more content on real estate investing. See you in the next video.